Well, here we are, just around about the start of the New York session, and it's Monday, the 7th of March. And what we've got here is the euro and the pound on our charts, and this is literally just a 5-minute update. I want to show you what's happened and why it was good to be cautious. And let's just zoom in actually. And get a better view. So this is the hourly chart of the euro against the US dollar, and you can see we were talking about a potential long trade around about here yesterday, and it was about this time yesterday. Sorry if I sound a little tired, but it's quite late at night here, and I've had quite a long day. You can see the euro's just dropped down. We've perhaps got a low point here, but we're still in this very strong downtrend, and there's nothing beneath us of any significance to stop this fall. And we've still got ongoing problems in Ukraine, and you saw my last video. I titled it something about the crisis in the Ukraine, not the Ukraine. Apparently that's not the right way to say it, although we always said it like that growing up, but it's just called Ukraine. So there's the Fibonacci of the move down from the top, and you can see we're miles away from the 38% retracement, and one would think we might get back up there at some stage, but right now we're a very long way away from there, and the best we can hope for is once again counter trend trades, but they're very risky. If we look at the hourly chart, that's that, and then we switch over to the daily chart, and I did illustrate to you that there is a horizontal line, support line, going across just around about here, actually more or less where we are at the moment. So we've hit that support area. So once again, all I can say is if you're willing to take the risk on a counter trend trade, you can see it's a really good support area, and we've fallen a long way. Remember, this is a day chart. Look at that precipitous drop right there. So once again, counter trend, maybe, if you're willing to take the risk. I'm willing to take a small trade here, but it'll be a very small position, hoping for a move back up to this 38% Fibonacci. And that's the best I can hope for, really, just a small position with low risk and with a hope of a move back up there. And in fact, I did take a small position near the bottom of this area, but it's a very tiny position, and I didn't want to take more than that. So if I go back to the hourly chart, you can see we're still around about there. We got the makings of a potential reversal, but yeah, I just don't think it's worth risking anything significant on a counter trend trade. Rather wait for the market to move back up to this fib level at 38.2. That's just beneath 1.11. We're at about 1.086 right now. So it's 140 pips above us, this first resistance level. So that's about all I can say. If we have a look at the pound, all sounds a bit gloomy, really. Hang on, that's not right. We want the pound US dollar. There we go, same sort of thing there. And if I switch to the daily chart on the pound, you'll see, in fact, the pound's even worse. We've broken through this support level. If I draw a horizontal line there, this support level here, you can see where I get that from, and we've broken through it. So the pound's very bearish, and we've broken beneath the 200-day Bollinger Band. Yes, we got an oversold stochastic, but we've definitely broken through support there, and I think that this is not even worth looking at. The best you can hope for, once again, is a retracement back up to this previous support, which we've now broken, which will act as a resistance. And if we go across the hourly chart, you can see where that is in more detail. And so that's somewhere just above us. at 1.3150 odd. We're at about 1.31 now, so about 50 points above us. Might be a good opportunity for a short trade. We can actually get rid of this fib right there, because that's obviously of no use, and nor is this. Well, let's have a look at that one. That's the daily fib. This one here, we've broken beneath as well, so let's just have a look at where that's drawn. Yeah, so let's get rid of that one. And in the simplest form, that's where it looks. Pretty unpredictable. It's a bearish market, and if you're going to take counter trend trades, rather go for the euro, and then try and sell the euro again once it bounces and goes higher up. The pound, I don't think it's worth touching for a long trade, seeing as that we've broken beneath a significant support level. Rather wait for a bounce back up to that area and attempt a short trade, but we'll have a look how that develops as the week progresses and as things develop in the where are we? In the conflict that's going on in that area. You can see on the hourly chart that we're very, very, very near the low that we've formed a couple of hours ago, and yeah, we've got a couple of reversal candles. Look, you could actually try a long trade here right now. You could get away. So the price is currently at 1.3107, and you could have an incredibly tight stop loss at 3097, 20 pip stop loss. If you use a quarter size of your normal position, you'd be risking almost nothing with the hope of gaining a little bit, not very much either, but at least, a few pennies. But, whether you want to go through that stress and annoyance and bother for 40 or 50 pips, you might make 0.1% on your account. So that's the scenario. Not much else to say. I've given you the update on the two. If you want to have a look at the Australian dollar, we can do quickly. Yeah, so we did eventually drop down as I thought we would. I wasn't trading this at all. Let's just get rid of that trend line. If you remember one of our previous videos, I think it wasn't yesterday, it was the Sunday evening update. Yeah, it was last night. I said it was worth having a go at a short trade there on the Aussie dollar, having reached that resistance level. Well, that was a very good short trade, but I didn't take it. I was focusing on the two European countries. Let's just remove that fib. In fact, I want to remove them all because they're all a bit of a mess, and we'll put some fresh ones on later on. Well, we'll leave that one on. Okay, that's where it turned around at that fib, and I think it was the 78.6% fib going back quite a long way. Quick last look, and yeah, that's the 78.6 there's a very good example, actually, a fantastic example. I did mention to you in previous videos and in some of the training that I do that the 78.6% Fibonacci, this one here where the cursor is, it's my favorite on the whole chart, and very, very often we'll get a price reaction to that level. Either the price is drawn to that level or it bounces off it from the top or from the bottom. And there's a very classic example. Remember, I had this line drawn in before the price even got there, and it acted as a price magnet. Price reached up there, stretched up there, formed a spike high, reacted off that level, came back down again. Absolutely classic, beautiful, and the sort of thing that I look for every day. Is there a 78.6 in the